Welcome to our deep dive today. We're going to be jumping into the world of engineering and technology services.
Exciting stuff.
It is. And specifically, we're looking at L&T Technology Services.
LTTS.
LTTS, exactly. And their performance in Q3 of fiscal year 2025.
Good.
So to get the full picture here, we've gathered their earnings call transcript, press release, investor release, and even some questions from analysts.
Oh, wow. Okay.
Yeah, so we are going deep.
It sounds like it.
So one of the things that really jumped out at me right off the bat was even with some bumps in the road, especially in the automotive sector.
Okay.
LTTS reported record high deal bookings this quarter.
Really?
That's pretty impressive.
It is. How did they manage that?
Well, that's what we're going to find out.
All right.
Their press release highlighted a 9.5% year-on-year revenue growth.
Wow.
Which, in a global economy that's facing so much uncertainty,
Right.
that kind of growth is really something.
Yeah. It seems like they're very strategically focusing on specific areas that are kind of booming right now, especially within tech and sustainability.
Got it.
For example, they secured a $50 million deal with a global network provider.
Huge.
Yeah, for product integration services. So that's a really clear signal of their strength in the communications sector.
Right.
Which we know is just a hotbed of investment right now in digital transformation, 5G.
Absolutely.
Yeah, all that.
Now, they also talked about this new NVIDIA AI Experience Zone
Okay.
at their design hub in Bengaluru.
Interesting.
It sounds very high-tech. What is the significance of that?
Well, it's really all about them staying ahead of the curve in AI.
Right.
It's a field that's rapidly changing how engineering and tech services operate.
Right.
So by investing in this dedicated AI zone, they're really showing a serious commitment to AI innovation and providing cutting-edge solutions to their clients, especially those in the mobility and tech sectors.
I see. So they're putting their money where their mouth is, so to speak.
Exactly.
Now, speaking of AI, they mentioned in the earnings call that they have 174 patents filed.
Wow.
Related to AI.
That's a lot.
Including a specific focus on something called agentic AI.
Agentic AI.
Yeah. Can you shed some light on what that is?
So agentic AI refers to a type of artificial intelligence that can act independently and make decisions on its own.
Oh, okay.
Almost like an agent acting on your behalf.
I see.
Think of it as AI that can not only analyze data, but also learn from its experiences and adapt its behavior accordingly.
So it's like AI that could learn and grow?
Exactly. It has the potential to revolutionize how we interact with technology.
Wow.
Enabling machines to perform complex tasks autonomously.
That is really fascinating.
So LTTS's focus on agentic AI really showcases their commitment to pushing the boundaries of AI research and development.
They are going all in on AI.
They are.
Okay. We've talked about a lot of positives, but then there's kind of this elephant in the room.
Okay.
The automotive sector. Both the investor release and earnings call mentioned some serious challenges there.
Oh.
Particularly with delays in spending on those software-defined vehicles.
SDVs.
Projects, right.
Yeah.
Or SDVs, as you said.
Right.
It's interesting that they're being so upfront about these challenges.
Well, they do explain why it's happening.
Okay.
OEMs, the companies that manufacture the vehicles, are facing shifting regulations and, changing consumer demand.
Right.
So this is forcing them to reevaluate their priorities and push back some of their model releases.
I see.
SDVs, which are vehicles that are heavily reliant on software,
Right.
are at the heart of this shift.
Okay. So they're not just ignoring it. They're saying, hey, this is what's going on.
Exactly. They're being transparent.
But they're not putting all their eggs in one basket.
Right.
The earnings call also mentions that they're seeing growth in other parts of the mobility segment.
Like what?
Like trucks, fleets, and rail.
Okay.
So it's a diversified approach.
Which is a smart move.
Right.
By not relying solely on the automotive sector, which is facing these headwinds.
Yeah.
It demonstrates flexibility and an ability to seize opportunities where they arise.
I like that.
Yeah.
Now, another thing I thought was fascinating.
Yeah.
They're not just simply hiring more people to fuel their growth.
Interesting. What are they doing?
Instead, they're leaning on automation, AI,
Okay.
and their own software tools to make project delivery more efficient.
I see. So it's all about working smarter, not harder.
Exactly.
Yeah. That strategy speaks volumes about their long-term goals.
Okay, how so?
Well, they're aiming for higher profit margins. They've got their sights set on becoming a $2 billion revenue company in the medium term.
Wow.
To achieve that, they need to be smart about their resources.
Right.
So this approach, leveraging technology for efficiency, shows a clear focus on sustainable, profitable growth.
That makes sense. Now let's talk about the IntelliSwift acquisition. What's the strategy behind that?
It allows them to tap into hyperscalers, these massive data centers,
Right.
cloud infrastructure providers, powering the internet.
Right.
This is a high-growth market,
Got it.
and LTTS is now in a much stronger position to compete.
I see. So it's about more than just adding to their existing business. They are strategically positioning themselves.
Exactly. And you know what else is interesting?
What's that?
IntelliSwift also opens doors to exciting new areas like fintech, retail, healthcare.
Oh, wow.
These are all sectors that are ripe for disruption and innovation.
Huge growth potential.
Exactly. And LTTS is now better equipped to offer services in these areas.
All right. So before we dig into their financials, let's just do a quick recap of what we've learned about LTTS so far.
Okay. Sounds good.
They are demonstrating a very strong commitment to AI innovation, particularly in the areas of agentic AI and the creation of their dedicated AI experience zone.
Yeah.
They're navigating the challenges in the automotive sector by diversifying within the mobility segment.
Right.
Focusing on areas like trucks, fleets, and rail.
Smart move.
And then they're strategically acquiring companies.
Like IntelliSwift.
Exactly. To expand into new high-growth markets and enhance their service offerings.
It's all about strategic growth.
It is. Now let's dive into those financials and see how these strategic moves are reflected in their numbers.
Okay, let's do it.
Starting with overall revenue.
All right. They reported revenue of 2,653 crores for the quarter, which is a 3.1% increase compared to the previous quarter and a significant 9.5% increase year-on-year.
Wow.
This demonstrates continued growth, even with all the economic uncertainties we talked about.
That is very impressive.
It is.
And what about net profit?
So their net profit came in at 322 crores, up slightly by 0.9% from the previous quarter, but what's more telling is their EBIT margin, which stands at 16.2%, excluding those one-time M&A expenses. That's a significant jump of 110 basis points from last quarter.
Wow.
This clearly shows they're focused on improving profitability and operational efficiency.
They are. And their free cash flow was quite impressive as well, wasn't it?
Absolutely. They reported a record free cash flow of 638 crores for the quarter.
Okay.
It's interesting to see them achieving such strong financial performance while simultaneously making strategic investments in areas like AI and acquisitions.
So they're not just sitting on their cash, they're investing it wisely.
Exactly. It suggests they're striking a good balance between investing for future growth and ensuring current profitability.
Now let's dig a little deeper into their operational performance, starting with their headcount.
Okay, so their employee headcount remained relatively stable at 23,465.
Okay.
This aligns with what we discussed earlier about them not solely relying on headcount increases to fuel their growth.
Right.
They're instead focusing on optimizing their current workforce through initiatives like automation and leveraging AI.
It's about working smarter, not harder.
Exactly.
And what about their on-site offshore mix?
So their offshore operations accounted for 58.6% of their work.
Okay.
Indicating a focus on cost optimization and tapping into those global talent pools. This approach helps them maintain a competitive cost structure,
right,
while also accessing specialized skills from different parts of the world.
It's a global world.
It is.
Now let's take a look at their revenue by vertical.
All right.
It seems like the tech segment really led the growth this quarter.
Yes. The tech segment experienced an 11.1% sequential increase.
Wow.
With key drivers being medtech, hyperscalers, and communication providers.
Okay.
This highlights their strength in areas like software product engineering, cloud computing, and AI.
So they're really well positioned in those high growth areas.
They are.
And what about their sustainability segment?
So their sustainability segment also showed healthy growth of 4% sequentially,
Okay.
driven by demand in plant modernization and automation.
Interesting.
This is clearly aligned with their go deeper to scale strategy, demonstrating their ability to capitalize on the growing focus on sustainability across industries.
They are riding that wave. Now let's talk about their geographic revenue breakdown.
All right. So North America remained their largest market, contributing 51.5% of their revenue.
Yeah.
This was followed by Europe at 18.2%, India at 22.7%, and the rest of the world at 7.6%.
So they have good spread.
They do.
This spread shows a good level of global diversification, which is key for navigating economic uncertainties and geopolitical risks in any single market.
Absolutely. It's all about managing risk.
Now, let's move on to their guidance for the next fiscal year.
Okay.
They are projecting a near 10% revenue growth in constant currency,
Wow.
including the anticipated contributions from the IntelliSwift acquisition.
All right, ambitious.
It is. And their EBIT margin projections.
They're aiming for a consolidated EBIT margin near 15% in Q4 of fiscal year 2025. More impressively, they have aspirations to boost that to the mid-16% range between Q4 of fiscal year 2027 and Q1 of fiscal year 2028.
That is impressive. Those are ambitious targets.
Yeah.
But their Q3 performance, along with their strategic initiatives and acquisitions, suggest they're on the right track to achieve them.
They seem to be executing well.
They do.
And their CEO, Amit Chadha, also reaffirmed their medium-term goal of hitting $2 billion in revenue and an EBIT margin between 17% and 18%.
Okay.
That shows a clear long-term vision for growth and profitability.
So for this first part of our deep dive into LTTS, we've covered a lot of ground, from their strong financial performance and strategic moves to those industry headwinds they're navigating.
Yeah, lots to unpack.
Let's take a quick break, and when we come back, we'll delve into the insights from the analyst Q&A during their earnings call.
Sounds good.
We're back and ready to dig into those analyst questions from the earnings call.
Yeah, those questions often uncover things we might not see in the press releases, right?
Absolutely. And one thing that really stood out to me was the focus on the sustainability of those record deal wins.
Okay.
They booked 8 large deals this quarter.
Including that $50 million one we talked about?
Exactly.
Yeah. Analysts wanted to know, can they keep this up?
It's a valid question.
Right. Can they keep landing these big deals?
What did LTTS have to say?
Well, they seem pretty confident
Okay.
about maintaining similar levels of deal wins in the next quarter.
Okay.
They pointed to a strong and growing pipeline of potential deals, especially in those key areas we've been talking about, AI, next-gen software, industrial automation.
Right.
They also mentioned the success of their revamped approach to large deals,
Interesting.
which focuses on tailoring proposals to meet very specific customer needs.
So it's not just about getting any deal, it's about getting the right deal.
Exactly. Deals that really align with their overall strategy and growth areas.
Now, another question that came up, understandably,
Yeah.
was about the automotive vertical
Mm-hmm.
and what the outlook is for the coming quarters.
Makes sense.
Right, with the challenges OEMs are facing.
Right.
There are concerns about LTTS's exposure.
They still have a sizable chunk of their business tied to the automotive industry.
They do. What do they have to say about that?
Well, they acknowledge the difficulties,
Okay.
and they expect those difficulties to continue for a couple more quarters.
Okay.
However, they emphasize their multi-pronged approach.
Within the mobility segment.
Yeah.
Okay.
They pointed to growth in areas like truck,
Okay.
off-highway vehicles, even aerospace and rail.
Wow. So they're branching out.
They are. They also have a number of large consolidation and transformation deals in the pipeline,
Interesting.
which should contribute to growth in the coming quarters.
So they're acknowledging the reality,
Yeah,
but they're also highlighting their strategies
to address those challenges.
to address the challenges.
Yeah.
I always appreciate that kind of transparency.
Transparency is key, especially in these uncertain times.
Now, another analyst question focused on the potential impact of the upcoming U.S. elections
Okay.
on client behavior.
Interesting.
Right. Given the possibility of policy changes,
Mm-hmm.
economic uncertainty.
Yeah, a lot can change depending on the outcome of those elections.
It can. How did LTTS address this?
They emphasize their global and local approach.
Okay.
So while they have a significant presence in the U.S.,
Mm-hmm.
they also have a large number of employees who are local citizens.
Got it.
This localized approach allows them to kind of navigate potential political shifts,
Right.
maintain strong relationships with clients regardless of the outcome.
It's smart. It's not just about being present globally.
Yeah.
It's about being embedded in those local markets.
Exactly. And they also stress their focus on adapting to, the specific needs of each region.
Okay.
Really understanding the nuances of each market, being flexible enough to adjust.
Now, I remember seeing a question about the impact of currency fluctuations on their financials.
Mm-hmm. With the Indian rupee depreciating against the U.S. dollar.
Exactly.
That could have a significant impact.
It could. How did they address this?
Their CFO, Rajiv Gupta, explained that They actively manage currency risks
Okay.
through hedging strategies.
Okay.
These help minimize the impact of those fluctuations on their performance in the long run.
So they're being proactive about managing that risk.
Exactly.
Let's talk about that IntelliSwift acquisition again.
Okay.
What additional insights did the analyst questions reveal?
Well, there are a lot of questions about the integration process,
Okay.
the expected financial impact.
Makes sense.
Analysts wanted to understand how it would affect their margins, both short and long term.
Right, because IntelliSwift was operating at a lower margin.
On LTTS, yeah.
So how are they planning to integrate them, and what's the anticipated impact?
So they provided a very detailed breakdown of their integration plan. They highlighted the formation of a new subsegment
Okay.
called Software and Platforms,
All right.
which combines their existing ISV business with IntelliSwift's expertise.
Okay.
This new subsegment is expected to drive growth in those high-growth areas we discussed earlier.
Retail, fintech, healthcare.
Exactly. So they're not just absorbing IntelliSwift. They're strategically using this to create new avenues for growth.
That's smart.
They also mentioned taking steps to right-size the organization, strengthen the leadership team, improve margins by leveraging synergies.
Sounds like a well-thought-out approach.
Yeah.
And what about those concerns regarding the impact on margins?
They address that head-on. While they anticipate a slight dip in EBIT margin in Q4 of fiscal year 2025 due to the consolidation of IntelliSwift's financials,
Okay.
they are confident in their ability to improve IntelliSwift's margins to double digits over time.
Wow. Okay.
Their long-term vision is clear.
Okay.
They project a consolidated EBIT margin in the mid-16% range between Q4 of fiscal year 2027 and Q1 of fiscal year 2028.
So it's a bold move to acquire a company operating at a lower margin.
It is.
But it seems like they have a solid plan to bring those margins up,
Yeah.
which would ultimately benefit their overall profitability.
Right. It's like a fixer-upper house.
Yeah.
You see the potential. You have a plan to unlock it.
I like that analogy.
Yeah.
Now, another analyst question focused on LTTS's capital allocation strategy. They've made substantial investments this year.
Right. Both organically and through the IntelliSwift acquisition.
Exactly. So the question is, how are they managing all of this?
Right. Well, they emphasize their disciplined approach to capital allocation.
Okay.
Their goal is to strike a balance between investing in growth opportunities,
Okay.
both organic and inorganic, while also maintaining a healthy balance sheet and returning value to shareholders.
So it's about finding that sweet spot,
Between investing in growth
right?
and rewarding shareholders, not an easy task.
No, it's not.
But their strong free cash flow generation gives them the flexibility to do both.
That makes sense.
They can fund their growth initiatives while also considering options for returning capital to shareholders.
It's a balanced approach.
It is.
Now, we can't talk about a technology services company without discussing talent.
Right.
Analysts were curious about their strategy for managing talent in such a competitive market.
Where skilled engineers and tech professionals are in such high demand.
It's a war for talent out there.
It is. So they outlined their multifaceted approach,
Okay.
which includes competitive compensation, benefits, a strong focus on employee development and training,
Okay.
cultivating a culture that values innovation and collaboration.
Those are all key ingredients for attracting and retaining top talent.
They are. They also highlighted their commitment to diversity and inclusion,
Okay.
which is not only the right thing to do,
Right.
it's a smart business strategy.
It is.
Allows them to tap into a wider talent pool and bring diverse perspectives to the table.
Now, given the increasing complexity of the global economy, managing risk is just paramount.
Absolutely.
Did analysts bring that up?
Oh, yeah. They were definitely interested in understanding how they manage risk,
Okay.
in such a dynamic and interconnected world.
Right.
So they highlighted their comprehensive risk management framework,
Okay.
which covers a range of areas,
Wait.
including operational, financial, cybersecurity, and geopolitical risks.
So it's not just about one area, it's holistic.
It's holistic.
What do they say about their approach?
They emphasize their proactive approach to identifying, assessing, and mitigating potential risks.
Okay.
It's about having systems in place to anticipate and address challenges before they escalate.
Be prepared.
Be prepared,
That's key.
especially in today's business environment.
Now, another topic that came up was LTTS's sustainability initiatives.
Okay.
It's clear that investors are really interested in how companies are addressing those environmental, social, and governance factors.
Those ESG factors.
ESG factors,
Okay.
right. What do they share about their program?
They shared details about their very comprehensive ESG program,
Okay.
which covers a wide range of areas.
Okay.
They talked about reducing their environmental footprint,
Okay.
promoting diversity and inclusion,
Uh-huh.
ensuring ethical business practices, supporting their local communities.
It sounds like they are taking a holistic approach to sustainability.
Exactly. They highlighted their commitment to the United Nations Sustainable Development Goals
Okay.
and their efforts to integrate sustainability into all aspects of their operations.
So it's not just a separate initiative.
It's part of their DNA.
It's encouraging to see that.
It is.
So let's zoom out a bit and look at those broader trends shaping the technology services industry
Okay.
and how LTTS is positioning itself to capitalize on them.
All right. Good idea. So one of the most significant trends, of course, is the rapid adoption of cloud computing.
Right.
Businesses across all industries are moving their operations to the cloud.
Right.
LTTS is very well equipped to benefit from this trend.
They seem to be making all the right moves.
They are. They've already built a solid foundation.
In cloud technologies.
Yes. And their acquisition of IntelliSwift further bolsters their capabilities in this area.
So they're not just standing still, they're building on that foundation.
Exactly. And they're not just limiting themselves to the big cloud providers like AWS, Azure, Google Cloud.
Oh, interesting.
Yet they're also exploring emerging cloud technologies like edge computing,
Okay.
serverless computing. These are expected to drive significant growth in the coming years.
So they are on the cutting edge.
They are.
What other trends are shaping the industry?
Well, we've already discussed artificial intelligence and its transformative potential.
Right.
LTTS is recognized as a leader in this field with deep expertise in machine learning, deep learning,
Right.
natural language processing, computer vision.
It's a long list.
It is. And they're applying these technologies to a wide range of industries and use cases.
So they're not just focusing on one specific area. They're branching out.
From automating engineering processes to developing intelligent products and solutions.
It seems like they're really trying to push the boundaries of what's possible with AI.
Absolutely. And their investment in that NVIDIA AI Experience Zone really shows their commitment.
Now, another trend that's gaining traction is the Internet of Things.
The IoT.
IoT.
Yeah.
Right. Connecting devices, gathering data, and using that data to make smarter decisions.
It seems like LTTS has a strong focus on IoT as well.
They do. They have expertise in areas like sensor technology, data analytics, and connectivity solutions.
So they're helping clients leverage IoT to connect their products, operations, gather real-time data, make those data-driven decisions.
So they are helping to bridge the physical and digital worlds through IoT.
Exactly.
Now, another area we can't ignore is cybersecurity.
Right.
It's more important than ever.
Absolutely. As businesses rely more and more on technology, the threat of cyber attacks is growing.
Exponentially.
Yeah. So LTTS has a dedicated cybersecurity practice, providing a full range of services. Everything from threat assessment to security awareness training.
So they're helping clients protect their critical assets and data.
From those increasingly sophisticated threats.
Right. You can't just ignore it anymore.
You can't.
Now, another trend that's really reshaping the industry is digital engineering.
Yeah, it's all about using digital technologies to transform how products are designed, developed, and manufactured.
And it seems like LTTS is right at the forefront of this trend.
They are. They're leveraging technologies like digital twins, virtual reality, augmented reality.
Create these immersive experiences.
Immersive and collaborative engineering experiences.
So they're really blurring the lines between the physical and digital worlds.
They are. They're helping clients accelerate their digital transformation journeys and create innovative products and solutions.
So they're not just keeping up with the trends, they're shaping them.
They are.
It's clear that LTTS is operating in a very dynamic and rapidly changing industry. But they're navigating these complexities with a balanced approach. A strong focus on execution and a clear commitment to innovation.
It seems like they have a good handle on things.
Now, before we move on, I want to circle back to their corporate social responsibility initiatives, their CSR program, because what they're doing is really impressive.
It is. From what they've shared, they're actively engaged in various initiatives that really demonstrate their commitment to social good.
One that really stood out to me was their program to digitally empower rural women artisans.
That's fantastic.
It is. Equipping these women with the skills and resources to thrive in the digital economy.
It's a powerful example of how technology can be used to create that positive social impact.
Empowering individuals and communities.
Exactly. They're providing these women with training in areas like social media marketing, digital payments, and financial management.
Giving them the tools they need to succeed.
Exa-
It's truly inspiring.
It is.
And it's not just this one program. They also organized cancer awareness campaigns,
Okay.
screening camps.
Important for early detection and
Yeah.
treatment.
It is.
And they're not just raising awareness, they're
Right.
also providing support to survivors,
Okay.
offering nutrition kits, prostheses, and wigs.
That's going above and beyond.
They're taking a holistic approach.
And their commitment to education and skill development is really commendable.
It is.
They've implemented various programs aimed at enhancing education opportunities for underprivileged children,
Okay.
providing vocational training.
To equip individuals with the skills they need
Exactly.
to succeed.
It's clear they're leveraging their resources and expertise to address critical social issues,
Yeah.
contribute to a more equitable and sustainable future.
It's not just about philanthropy.
Right.
It's about weaving social responsibility into the fabric of their business.
And that's what's so impressive.
Mm.
Their CSR initiatives are really aligned with their core values,
Yeah.
their vision for a better world.
They're not just fulfilling an obligation. They're genuinely striving to make a positive impact.
It's inspiring.
It is.
Now, let's shift our focus back to their financial performance.
Okay.
Delve a bit deeper into their segment-wise performance.
All right.
We know their overall revenue for the quarter was strong,
Mm-hmm.
but I'm curious to see how each segment contributed to that.
So starting with mobility,
Okay.
which accounted for 32.4% of their revenue.
Okay.
They experienced 4.7% year-on-year growth,
Okay.
but a 7.1% sequential decline.
Not surprising given the challenges in the automotive sector.
Exactly. They attributed this decline to factors like the delays in OEM spending on SDV projects,
Okay.
as well as a slowdown in the agriculture and construction sectors
Interesting.
due to uncertainties surrounding potential tariff changes.
So it's not just the automotive industry. There are external factors at play
There are.
affecting their business.
Yeah. It's a good reminder that even well-performing companies can face headwinds.
Absolutely. Now, moving on to sustainability,
Okay.
which contributed 31.2% of their revenue.
Right.
They achieved a solid 3.1% sequential increase and 7.5% year-on-year growth.
So strong performance.
Very strong.
Especially given the uncertain global economic climate.
Right. What drove this growth?
They mentioned strong demand across oil and gas,
Okay.
FMCG,
Okay.
and industrial automation,
Got it.
which is being driven by factors like plant modernization, digitization, and supply chain adjustments.
Okay.
They also secured a multi-million-dollar deal with an oil and gas giant
Wow.
to design an integrated operations center.
Okay.
This leverages their expertise in plant engineering, smart world technologies, and AI solutions.
So again, combining those different capabilities to meet evolving needs.
Exactly. And now, their star performer,
Okay.
the tech segment.
All right. Let's hear about it.
So it contributed a significant 36.4% of their revenue, achieved a remarkable 9.8% sequential increase,
Yeah.
and a 9.5% year-on-year growth.
Those are impressive numbers.
They are. They attributed this strong performance to growth in medtech,
Okay.
hyperscalers, and communication providers,
Got it.
where they leveraged their expertise in software, product engineering, cloud computing, and AI.
So they are firing on all cylinders in that tech segment.
They are.
Now, let's shift our focus to their margins.
Okay.
Always a key area for investors.
Absolutely.
What were the highlights there?
Well, their EBIT excluding those one-time M&A expenses, was a healthy 16.2% in Q3.
Right.
A notable improvement from the previous quarter.
So it seems like their investments are starting to translate into margin expansion.
Exactly. They attributed this expansion to various factors,
Right.
including the revenue growth, improved operational efficiency,
Mm.
a favorable revenue mix with a higher contribution from high-margin projects,
Okay.
and ongoing efforts to optimize their cost structure.
So they really focus on improving those margins.
Yeah. They are.
They did acknowledge the concerns regarding the impact of wage increases on their margins, right?
Yeah, they did.
Right,
They
right.
addressed the impact of those wage hikes, especially for their Indian workforce.
Right.
But they also emphasized their ability to kind of mitigate those impacts through various measures,
Okay.
like pricing adjustments,
Okay.
productivity improvements,
Mm-hmm.
and a strategic focus on offshoring.
So they're being proactive about managing those costs.
They are. They also talked about their margin expectations
Okay.
for the coming quarters,
Mm-hmm.
particularly the potential impact of the IntelliSwift acquisition.
Right, because IntelliSwift is currently operating at a lower margin.
Yeah, so how are they planning to address that?
Right.
Well, they acknowledge there will likely be a short-term impact on their margins in Q4 of fiscal year 2025
Okay.
as they consolidate IntelliSwift's financials.
Mm-hmm.
However, they're confident in their ability to improve IntelliSwift's margins to double digits over time through integration efforts and synergy realization.
Okay.
Their long-term vision is clear. They're projecting a consolidated EBIT margin in the mid-16% range between Q4 of fiscal year 2027 and Q1 of fiscal year 2028.
It seems like a tall order,
It is.
but they seem confident they can achieve it.
They do.
Now, let's move on to their cash flow,
Okay.
another critical aspect of their financial performance.
Right. They reported record free cash flow for the quarter, which stood at 638 crores.
That's a remarkable achievement.
It is, especially considering their investments in growth initiatives and the recent acquisition.
It really speaks to their strong financial management.
It does.
What did they attribute this strong free cash flow to?
They attributed it to several factors: improved collections, efficient working capital management, and a disciplined approach to capital expenditures.
So they're being very careful with their cash.
They are.
Now, let's dive into some of the key operational metrics,
Okay.
starting with their client profile.
All right. So they emphasize their focus on large global enterprises,
Okay.
which make up a significant portion of their client base.
Okay.
At the end of Q3, they had 378 active clients,
Okay.
with an increasing number contributing $1 million or more in revenue.
So they're landing those big fish.
They are.
That's a good sign.
It is.
What about the concentration of their revenue?
So their top 5 clients accounted for 15.2% of their revenue.
Good.
Their top 10 clients contributed 26.8%.
So it's a healthy balance.
It is a healthy balance.
They're not overly reliant on just a handful of clients.
Exactly, which reduces their risk.
It does. What about the breakdown of their revenue by project type?
So fixed price projects accounted for 41.2%
Okay.
of their revenue.
Okay.
And time and material projects represented 58.8%.
So it's a good mix.
It's a good balance.
Now let's talk about their employee statistics.
All right. They ended Q3 with a total headcount of 23,465
Okay.
and a voluntary attrition rate of 14.4%.
Okay. That attrition rate seems reasonable,
It does?
especially considering the demand for tech professionals.
Yeah. So what are they doing to keep their employees engaged?
Right.
Well, they highlighted various initiatives
Okay.
aimed at attracting and retaining top talent,
Okay.
including competitive compensation and benefits packages,
Mm-hmm.
robust professional development opportunities,
Right.
a focus on creating that positive and inclusive work environment.
It's all about creating a great place to work.
It is.
Now, let's move on to their discussion of growth strategy
Okay.
and their plans for capitalizing on emerging trends.
So they outlined several key areas of focus.
Okay.
One being continued investment in digital engineering.
We talked about that earlier.
Yep.
It's transforming the way products are designed, developed, and manufactured.
Exactly.
Yeah.
They highlighted their expertise in areas like digital twins,
Okay.
virtual reality,
Mhm.
augmented reality, allowing them to create those immersive and collaborative engineering experiences for their clients.
So they're not just talking about it, they're investing in it.
They are. They also talked about strategic partnerships,
Okay.
highlighting collaborations with leading tech providers like NVIDIA,
Okay.
Siemens,
Okay.
leaders in AI and industrial automation.
So it's about partnering with the best.
Exactly.
Now, beyond digital engineering, they also highlighted their focus on expanding into new geographic markets.
Makes sense.
So they're already global,
Right.
but they mentioned exploring opportunities in regions like Southeast Asia,
Okay.
the Middle East, and Latin America,
Okay.
where there's growing demand.
Yeah. So it's a strategic move
It is.
to diversify their geographic footprint,
Okay.
allowing them to access new talent pools, new clients,
Yeah.
reduce their dependence on any single market,
Spreading that risk.
spreading the risk.
Now, in addition to geographic expansion, they also emphasized organic growth,
Okay.
investing in research and development. expanding their service offerings.
So they're not just relying on acquisitions.
Exactly.
They're investing in those organic initiatives to enhance their capabilities,
Right.
expand their market reach.
Now, with every opportunity
Right.
come challenges.
There are always challenges.
What were some of those key risks and challenges that they talked about?
Well, one of the biggest, of course, is the intense competition.
Right.
They're facing competition from both established global players
Mm-hmm.
and emerging regional players.
Right. Everyone's trying to get a piece of that pie.
Exactly. And then there's the ever-present challenge of macroeconomic uncertainties.
The global economy can be unpredictable.
It can. There are concerns about a potential recession, which could lead to reduced IT spending.
Yeah, that's a valid concern.
Yeah. They also highlighted the potential risks associated with geopolitical uncertainties,
Such as?
trade wars,
Okay.
political instability,
Mm-hmm.
regulatory changes.
Which could disrupt their operations or impact their client relationships. It's exactly.
The world is a complex place.
It is. They also talked about the potential for technological disruptions.
Right. The landscape is constantly evolving.
It is. New technologies are emerging rapidly, which could potentially disrupt their existing business models or make their current offerings obsolete.
So they have to be on their toes,
They do.
adapting to those changes.
Exactly. And then, of course, attracting and retaining top talent,
Right.
especially in areas like AI, cloud computing, and cybersecurity.
That's always a challenge.
It is. They also highlighted the importance of maintaining a strong corporate culture and value system
Okay.
as they grow and expand globally.
Makes sense.
They emphasize their commitment to ethical business practices, diversity and inclusion, and environmental sustainability.
So it's not just about growing the business, it's about growing it the right way.
Exactly. It's about building a sustainable business.
Right.
Not just in terms of profits,
Right.
but in terms of ethics and values.
Now let's shift our focus back to the future.
All right. And delve into some of those key growth opportunities that they highlighted.
So one of the most significant opportunities they see is the continued growth of cloud computing.
Right. That trend is only going to accelerate.
Exactly. LTTS seems well positioned to capitalize on this growth,
They do.
given their expertise in cloud migration, cloud-native application development, cloud...
Mixed services.
Right. And they're exploring those emerging cloud technologies.
Like edge computing.
Edge computing, serverless computing.
Right. So they're looking ahead.
They are. Another major opportunity they highlighted is AI.
Of course.
It's transforming everything.
It really is.
And LTTS is at the forefront.
With their expertise in the machine learning and deep learning.
Exactly. They're using that to develop innovative AI solutions across industries.
It's amazing how AI is being applied to solve these complex problems.
It is. Now, another area they're excited about is the Internet of Things.
IoT, yeah.
Yeah,
Connecting all those devices, gathering data.
exactly. LTTS is well positioned to benefit from this trend.
With their expertise in sensor technology.
Data analytics, connectivity solutions
They're helping clients connect their physical assets.
to the digital world,
Really?
enabling them to gather that real-time data.
And make those data-driven decisions.
It's all about making smarter decisions.
Now, another area, and this is tied to the growth of technology in general, is the demand for cybersecurity solutions.
Yeah, as businesses rely more and more on technology,
Right.
the threat of cyber attacks is growing.
A huge market.
It is, and LTTS is prepared.
With their dedicated cybersecurity practice
They are constantly enhancing their offerings.
to address the evolving threat landscape,
Exactly, and they're helping clients protect their data
their assets.
from those increasingly sophisticated attacks.
It's a critical area,
It is. Now, another exciting area for LTTF is digital engineering.
which we've touched on a bit.
Yeah, but it's worth emphasizing.
Because it's so transformative.
Right.
They're leveraging technologies like digital twins, virtual reality.
Augmented reality to create those immersive, collaborative experiences.
So they're shaping the future.
They are. They're not just keeping up with trends, they're creating them.
All right, so it's clear that LTTS is operating in a very dynamic industry. But it seems like they're navigating those complexities really well.
With a balanced approach, strong focus on execution,
And a commitment to innovation.
they're a company to watch in the coming years.
They are. Okay, so before we jump into our key takeaways from this deep dive, what does LTTS's success tell us about the industry as a whole?
I think it highlights the resilience of the sector, even with all the economic uncertainty.
And the geopolitical challenges?
Yeah, the demand for technology services is still strong,
It is.
driven by this ongoing digital transformation.
And across every industry, really.
Across all industries, companies recognize that technology is essential.
Right. To growth and efficiency.
And they're willing to invest in it.
Even during those turbulent times.
Right. And companies like LTTS are well positioned to capitalize on this demand.
Now, one thing that really stood out to me
Yeah.
is their relentless focus on innovation.
It's clear you can't just stand still in this industry.
You can't. You have to constantly adapt and evolve.
Companies that are slow to embrace new technologies will get left behind.
And LTTS is setting a great example.
They are. Their investments in AI, cloud computing, IoT, cybersecurity, digital engineering,
It shows their commitment.
they're creating those trends.
Another takeaway for me is talent.
Oh, yeah. The companies that can attract and retain top talent.
Have a huge advantage.
They do. And LTTS seems to understand this.
With their focus on creating a positive work environment
Offering competitive compensation and benefits.
and investing in development,
Exactly.
they're treating their employees as assets.
As partners. Now, another insight
Yeah,
is the need for diversification
I think that's a really important point.
to mitigate risk, ensure sustainable growth,
Yeah, companies that rely too heavily on a single sector
or a single market
are vulnerable
to economic downturns.
or disruptions.
Right. And LTTS has done a great job of diversifying.
Their clients, their offerings, their markets
That gives them a buffer.
against the unexpected.
One final takeaway is the importance of corporate social responsibility.
Absolutely.
It's becoming a must-have.
Investors, clients, employees,
They're all looking at a company's commitment to ESG factors,
and LTTS's comprehensive program.
focusing on those areas like digital inclusion,
Community development
sustainability.
really demonstrates their commitment.
They're taking concrete steps to create a more equitable and sustainable future.
So it's clear LTTS is a company on the move,
They're delivering strong results.
making smart decisions.
They're a force to be reckoned with.
They are. Now, before we go, I want to leave you with a thought-provoking question.
Okay.
As LTTS expands into those service-led ER&D sectors, like fintech and retail, how will this shape their future innovation strategy?
Interesting question.
Will they leverage their engineering expertise
To develop new financial technology solutions.
or create innovative retail experiences?
Only time will tell.
It's exciting to think about. Well, that's a wrap on our deep dive into LTTS.
We covered a lot.
We did. We hope you've enjoyed it and gained some valuable insights along the way. What stood out most to you? Until next time, keep diving deeper.